Hello, and welcome back to Coin Lady channel. Well, friends, we have some major announcements regarding Crypto.com, one of the leading cryptocurrency apps and exchanges in the globe. So, they've decided to halt institutional trade with the United States. The decision was made because of the current market climate, which has resulted in low demand from U.S. institutions. The ripple effects of Gary Gensler's enforcement-first approach to regulation are inevitable. Right? Gary Gensler and the SEC have not issued definitive rules. In the marketplace, there is a great deal of uncertainty and obscurity. The clarity is being requested by entrepreneurs and pioneers. Gary Gensler, though, has a desire to rouse them. So that the TradFi incumbents for whom he is working may take control, he is eager to see these crypto startups destroyed. Even if Crypto.com, Coinbase, and Binance can all operate freely in other parts of the world, the fact that they are closing shop in the United States is a huge bummer. Hong Kong, Dubai, and many more places have opened their arms to them. And the fact that this is happening is a major bummer. Because of the SEC's action against Coinbase and Binance, Robinhood delisted Cardano and the ADA token Solana and Polygon Matic just recently. Keep in mind that they are not suing for each individual token. They are scattering a few of them over several legal actions. Again, if the corporations don't fight back and instead settle, or if they lose the lawsuit for some other reason, Gary counts that as a win and continues to insist that, see, these are securities. I warned you, but he didn't challenge the tokens themselves in court. That right there, guys, is the kind of slimy, devious thug we're dealing with. This is why we must keep fighting. A decisive win in the SEC versus Ripple lawsuit, where Ripple emerges victorious and XRP receives the clarification, is within reach in a matter of, say, a few weeks. Everyone in the crypto sector is taking a look. This is a landmark case that will pave the way for future decisions and serve as an example to others. The other altcoins need to be able to fight back for many different trading platforms. And Meta Law Guy, who is obviously a lawyer, summed up the significance of this litigation very well. And if success for Ripple was the goal. Please mark your calendars for Tuesday, June 13th, when we will be releasing the Bill Hinman emails. Tuesday of next week, to be exact. The SEC is afraid their wrongdoing would be revealed, thus they don't want them to go public. That's perhaps why authorities have stepped up their enforcement efforts in recent weeks. Let me tell you what Metal Man had to say about this week's bad news for Gary. According to him, the SEC versus Ripple ruling is becoming increasingly important. Reasons are as follows. In the SEC's case against Coinbase and a large portion of Binance's case number 2, the SEC argues that 13 tokens traded on Coinbase are securities. If Judge Torres finds that XRP tokens selling on secondary markets are not securities, the entire premise for the SEC's case against Coinbase will be undermined. Therefore, Coinbase is acting as a broker-dealer and clearing broker in the securities exchange without being properly registered to do so. However, the SEC has no legal standing if those 13 tokens are ruled not to be securities. Third, before you get your hopes up, a decision by Judge Torres will not be used as precedent in future cases and will not require other judges to reach the same conclusion. Judges in lower courts must adhere to the rulings of the Court of Appeals and the Supreme Court. Now, though, we come to the intriguing part. If I'm remembering correctly, the judge in charge of the Coinbase case is Judge Ray Reardon, who has only been on the bench for around 6 months. Both Judge Reardon and Judge Torres are employed by the same court in Lower Manhattan. Torres's ruling on XRP, therefore, would not be an irrevocable example. When deciding whether or not XRP is a security, I think Judge Reardon will carefully consider Judge Torres's legal analysis. In deciding whether the 13 tokens included in the Coinbase case are securities, I think Judge Reardon will use the same line of thinking. As we saw in number 6, this dynamic is bidirectional. The SEC will be overjoyed if Judge Torres determines that XRP tokens traded on secondary markets are securities, and will argue that the courts hearing the Coinbase and Binance cases should follow his logic. Warnings should be stated as point number 7. First of all, unlike Coinbase, Binance issued its own coin, called BNB, making its case more complex. Consequently, I believe that the SEC may have a case about BNB. This has nothing to do with a BNB between Binance and the Securities and Exchange Commission. I also share your sentiments on FTX and its FTT token. While this coin is very centralized, many of the others in the mix operate on decentralized networks. The tokens are given out to them. Many validators and nodes must exist. Take a look at what Cardano has to say about it. That's why Binance is crossing its fingers that Judge Torres will decide that XRP sales and issuance by Ripple do not constitute securities offerings. The caveats multiply. Even if Judge Reardon determines that the 13 listed tokens are not securities, Coinbase and the SEC might still argue that staking as a service qualifies as a securities offering, but the rest of the SEC's argument would be shredded. One last disclaimer, even judges on the same court can have different opinions on certain cases. However, I am confident that Judge Reardon, who has been on the bench for only 6 months, will not disagree with the legal reasoning of her more seasoned colleague in a matter of such monumental importance. Ultimately, he argues, it doesn't matter which way the courts rule, we have years of appeals ahead of us. There are now more people in the crypto community who have a vested interest in seeing a major win or significant Ripple win occur. It appears that the XRP army is receiving much-needed reinforcements. We really could use a win from Ripple. It's not necessarily the case. After doing some independent study and observing how things have developed, I have come to the conclusion that Ripple is currently in the lead. In my opinion, they will end up winning. I've been saying for a long time that I think Ripple will have to pay a fine because of the way they sold XRP back in 2015 or whenever it was. However, secondary market sales of XRP do not qualify as securities at this time. The SEC could, as Meta Lawman pointed out, file an appeal. However, the judge's decision would likely favor Ripple. It would give the business sector a much-needed boost. Coinbase is, unsurprisingly, taking the SEC to court. Therefore, a win for Coinbase is necessary. You know, I think Binance would lose on BNB, but they might be able to fight back on other fronts, like the other tokens and staking. There are a number of factors at play, including the necessity of grayscale for success with the Bitcoin spot ETF. And, as everyone knows, next week is a huge one. The emails from Hinman will be made public right now. You should all remember that last year I had Charles Hoskinson on my program. He wanted to speak a few words. The members of the XRP army disapproved of him. Yesterday evening he tweeted, XRP community article, ? ADA is thus added to the mix. Now is the time for completion of these various endeavors. I'm not picking on Charles specifically, but many of them were choosing to disregard Ripple and XRP while also failing to provide necessary support and unite behind the project. Surely some people were doing it on purpose. Hinman worked with Jay Clayton to secure these exemptions as part of Ethereum's original design. But now I see that they're all, corrupt scumbag Gary Gensler is wanting it all. Speaking of Bill Hinman, here is a clip of him discussing crypto policy at a Friday event hosted by the Aspen Institute that was highlighted by Eleanor Torretta of Fox Business. This is too crazy to be true, right? Hinman left the SEC to work in the cryptocurrency market after making all these secret deals to benefit Ethereum. I take it Jay Clayton did as well. And as chairman, Jay Clayton didn't mess around. And now we have someone even worse. Gary Gensler, who is helping the crooked Elizabeth Warren in her bid for the Treasury Department. Not surprisingly, Gary is echoing Elizabeth Warren's claims that we can get by just fine without cryptocurrency, tokens, or tokenized assets. The US dollar is a digital currency, right? The situation we're in is unfathomable. Now, John Deaton has posted his take on a recent discussion of crypto policy led by Bill Hinman at the Aspen Institute. Remember, he prompted. Keep in mind my words from 2 years ago when Hinman finally responds to the speech. He'll make a couple of remarks. First, he didn't know who Simpson was when he gave the speech. Thatcher belonged to the Ethereum establishment, or EEA. That's a fact, and we're aware of it. Isn't that a load of baloney? Second, he anticipated that he could keep the number of members to a minimum in the event that someone had joined without permission. It's a 100% assurance. John is correct then. Ignorance is bliss for Hinmans. And I have no idea. I've stated it a lot of times before. Hinman will act incoherent or inebriated to cover his tracks. You should have known that it wasn't just your inebriated uncle who was in the dark. I guess I was just trying to keep up with Jake Layton. Therefore, he will act as though he is a complete moron. However, everyone else is aware of it. Moreover, the emails and papers will be made public. Now. Look, John Deaton said to Gary Gensler, we've got to keep battling. We will prevail in legal proceedings. Gary Gensler is only a stopgap, so keep that in mind. He is a temporary regulator who will be gone from his position as SEC chairman in 2025. The SEC's response to the Coinbase writ of mandamus echoed Coinbase's argument that Gensler's comments and opinions are moot. Okay, I see now. Please, everyone, keep up the fight. Use the resources of social media and contact your representatives. The more we retweet, the more we share the videos, and the more we spread the word about Gary's hypocrisy and lies, the more attention we'll get from regulators, legislators, members of Congress, and so on. John then went on to comment on Gary's recent attacks against the cryptocurrency sector, in which he has been described as hucksters and scam artists, saying that he had some sympathy for Gary's position. It was sealed, according to John, when Elizabeth Warren decided to run for re-election on a platform that was firmly opposed to cryptocurrencies. Our banking and financial markets are completely under her and Gary Gensler's control. Gensler has labeled Brian Armstrong, Jesse Powell, Brad Garlinghouse, and anybody else at the helm of a cryptocurrency firm as hucksters and scam artists, while President Trump has included cryptocurrency traders in his talks. The current administration is completely committed to the fight against crypto. This is why I've been insisting that we give every court case our full attention. Not until late 2025, and only if a new president and Senate are elected. Now, clearly, the Hinman emails will be released next week, no, this week, on June 13th. And of course, on that date, Patrick McHenry has planned a huge crypto hearing. This week has a lot going on, so buckle up. It looks like a very busy week ahead. We should all keep our ears and eyes peeled here to see what develops. I can't wait to see the docs, and I'm interested to hear the crypto industry's reaction to them. And what Hinman and Jay Clayton and all these individuals are going to say about the Ethereum free pass as a whole. In addition, this week, Jay Clayton was on a panel with Dan Moorhead of Pantera Capital. Maybe some of you may recall my interview with him. He didn't say anything bad about Gary Gensler, but it's clear he doesn't approve of his work. And I think it's an obvious, really stupid decision to go after companies like Coinbase, which the SEC has given the go-ahead for an initial public offering. And on his last day in office, I believe even Jay Clayton, a fool who did nothing, sued Ripple. Obviously, I don't believe he would have done something that stupid. But Gary, we all know he's only playing along with his puppet masters in the Treasury to get a job there. He's now under Elizabeth Warren's control. I won't be playing the clip because it's just Jay Clayton making empty claims. The subtlety of his meaning, though, is discernible. His nonverbal cues. He isn't completely on board with Gary's plans, but he also doesn't want to openly criticize him or put him under the bus. And, Jay is, employed by a crypto company. Yeah. And now he's demanding crypto restrictions while claiming to have led the SEC. How come you didn't do it properly? Holy crap. What, you wouldn't dream of such a scenario? These individuals are completely absurd. It appears that Senator Cynthia Lummis will increase her support for the crypto sector. She has been really active on Twitter lately. And today, she said the following. She said that the group had stopped a proposed 30% tax on digital asset mining by the US president from being incorporated into the debt ceiling agreement. However, we still have a long way to go. I'm putting up a legal structure to make it possible for people and businesses in the United States to own and exchange digital assets. We'll keep you updated. In order to put out a buy, she naturally collaborated with Democratic Senator Kirsten Gillibrand. Politically motivated legislation. Of course, such legislation has yet to become law, but at least new people are working on it. Patrick McHenry and Glenn Thompson have a bill, as you may be aware. Tom Emmer and Darren Soto are working on a bill to clarify securities laws. This, however, is what you require. You need a large number of these representatives to introduce laws and initiate debate and committee hearings. I understand that it is a laborious process. From the outside looking in, it may seem like nothing is happening, but the government process is, unfortunately, slow. It's boring in a way. Really, really, really annoying. Right. I know. Sometimes I wish they'd just push it through, but that's not how it works. But with these people making these efforts, I can see the light at the end of the tunnel. We may not agree with everything Senator Lummis does or says, but at least she's trying to get crypto legislation passed. That being said, however, the rest of the world is progressing even as the United States faces all these headwinds and all the clampdowns, Operation Choke Point. I have some news to share with you first. A lawmaker in Hong Kong has extended an open invitation to cryptocurrency exchanges like Coinbase to set up shop in the city. Look at what's going on here, people. Coinbase, one of the largest and most popular cryptocurrency exchanges in the world, has been formally invited by Johnny Ng, a member of the Hong Kong Legislative Council, to establish its cryptocurrency operations in Hong Kong, including potential stock listing ambitions. The SEC has filed multiple cases against numerous cryptocurrency-based companies, including Coinbase and Binance, so this action is not surprising. Who then currently rules Hong Kong? China. China is in view. They published a white paper on Web3 technology. Their goal is to pivot. Open up retail trading to crypto, or pardon me, crypto trading to retail investors on June 1st, and I'm guessing it's Shanghai or one of these places in China into the crypto Silicon Valley, Hong Kong. The financial services industry is, of course, liberalizing laws. The Chinese government is aware of the United States tactics and is prepared to counter them. A macroeconomic and geopolitical conflict exists, right? And they're welcoming crypto startups with wide arms. The United Arab Emirates, Singapore, Japan, and many other major nations have all come to the same conclusion: this is where things are headed. UK and EU have both adopted crypto legislation. Once again, we're dealing with a corrupt regulator who is a total scumbag. Gary Gensler, I believe you will agree that we need to speak frankly. According to Representative Tom Emmer, we are not dealing with a good faith regulator. With this information in hand, it's easy to see how things turn out well for Ripple. Someone from their CBDC department tweeted today that Hong Kong will use Ripple CBDC technology and the XRP ledger to test its digital dollar in the $229 billion mortgage market. Hong Kong is testing its CBDC on the XRP ledger and seeking to do various things with the mortgage market, while Ripple is being sued in the United States for XRP and facing all these idiotic headwinds from Gary Gensler and the morons at the SEC and spending $200 million. Take a look at the contrast between those two things. Incredible when you stop to consider it. That's why he's spilling the beans here. An excerpt follows. Fubon Bank of Hong Kong and Ripple, a provider of blockchain technology, will conduct research on the HCD's potential applications in the realm of home mortgages, which constituted 1/5 of the banking industry's loan book in April. The pilot program will test the feasibility of offering the loans to homebuyers through an electronic wallet. According to those involved in the pilot program, the goal is to convert deed documents into digital tokens on the blockchain, which will then be used in the loan approval process. No matter how you feel about it, this is the way of the future. Mortgages, property titles, and legal agreements can all be processed over the blockchain. Insurance policies and payments can be automated using smart contract technologies. And consider it for a second. Titles to property, or perhaps I should say debts, can be recorded in the blockchain. However, have a look at this. A Hong Kong bank is at your disposal for this purpose. Create something new in the United States using the XRP ledger. True or false? American bank. They're collaborating with Ripple, I know. Think about it if they have this intention. There is no way they can. There is no way they can. Folks. They're an impediment because nothing is made clear. I know I've said this before, but we're dealing with scumbags in the administration and I'm tired of saying it. There will be fighting. The world at large is adopting this technology. There is no ambiguity in these nations. They are aware that these tokens are digital money. They are not out to emulate the SEC's tactics of filing frivolous lawsuits in an attempt to financially cripple businesses. This is the situation we're in. That's why we have to go to war. We need to make some noise here, people. Take a look at the contrast between them. In retrospect, the discrepancy is striking. Nonetheless, it's encouraging to see adoption efforts taking shape. I have faith in the XRP ledger and XRP itself. It's in my portfolio of work. My top asset is Bitcoin, followed by Ether and then gold. And I have faith that we will obtain it in the United States. However, the discomfort is inevitable. As a result, you should brace yourself for hardship as we move toward a more regulated and enforced society. Now, Binance CEO CC has tweeted some details about the exchange's net withdrawals. Since Binance US has been sued, users have been removing their coins off the exchange, and the company has announced that it will stop processing withdrawals in US dollars. It's true that people are, withdrawing money. Well, CC merely wished to impart and clarify, some data that could be misunderstood. I'm relieved he did, as common sense alone doesn't always suffice in these situations. Our analysis shows that $392 million has flowed out of Binance in the past 24 hours, he stated. We have a public-facing wallet. AUM asset under management in USD equivalent move is considered an outflow by some third-party analytics. Drops in cryptocurrency prices, for example, would be considered an outflow of capital. He insists that the two concepts are distinct. On a day with significant market fluctuations, some analysts solely track outflows. And everything took a major hit and went into reverse. In the case of arbitrage traders, there is often a massive increase in the daily volume of trading volume between exchanges. In comparison, in November of last year, we reprocessed a net outflow of $7 billion in a single day. So, the question he's emphasizing is, are there leaks? Yes, because of the legal action. However, some aggregators and people who do the chain research or analytics on these blockchains and, follow all these things, can get it incorrect when there are significant dips in price by providing only the number without providing the nuance or subtleties. Like, the AUM dropped because of withdrawals and the price crash, right? The value of Bitcoin and other cryptocurrencies fell today. As a result, I believe it is important to be aware of such matters. Binance, I'm sure, is feeling some heat from this case. However, there is talk that the Department of Justice might take action shortly. Binance, we just have to see what happens. Yet, life is difficult in general. The world is a harsh place. And I've been around for many, many market cycles, both up and down. Don't worry about me. Don't misunderstand me. Honestly, I have no fear. For the sake of dollar cost averaging, I've decided to buy the dip. What you just read is not financial guidance. You should read up on the current state of this market if you're unfamiliar with it. But you should realize that my perspective on this market is global, not simply American. I'm checking out what places like Hong Kong, the United Arab Emirates, the European Union, and so on have done. And I can feel the doors opening before me. I finally have insight. There appear to be more investments. The United States is the world's largest capital market, so naturally, they will figure it out. However, please be aware that the road there will be arduous at best. In any case, please share your thoughts with me. And like if you enjoyed the video, and also subscribe my channel. See you in the next one, bye.